Hello everyone, welcome to yet another session on goods and service tax filings. So we have moved to our 7th module, and in this module we are going to cover the reconciliation, ITC matching and books matching. So in this module we will cover the matching of GSTR-1, GSTR-3B and GSTR-2B. In the next topic we will cover the reconciliation of GST returns with sales register and the purchase register. So before proceeding with today's session, let us quickly see what we did in our previous module. So in our previous module, we learned about the composition scheme. What are the returns that are required to be filed under the composition scheme? CMP 08, that is the quarterly return for the composition dealers, where they have to declare their turnover and pay taxes thereon on a quarterly basis. Along with this, all the composition dealers are required to file GSTR-4 return, that is the annual return. The due date of such annual return is 30th June of the next financial year. Then we learned about the annual returns, that is GSTR-9, that all the regular taxpayer whose turnover has exceeded rupees 2 crores are required to file. For those taxpayer whose turnover has not exceeded rupees 2 crores during the preceding financial year are not mandatorily required to file, but they can file voluntarily. Then we learned about the ITC 04, that is job work reporting. So the principal is required to file ITC 04 form for the movement of goods, that is from the principal to the job worker. Then if the job worker further sends the good to another job worker, then also the principal needs to file ITC 04. Also, when the goods are received back and goods are supplied directly from the job worker to the third party recipient, then ITC 04 is required to be filed. Then we learned about the viewing and downloading of returns from the GST portal. We learned how to view the returns that has already been filed and how to download them in different formats like PDF, Excel, CSV or JSON format. How to use these formats of returns for different purposes. Then we learned about the notices, what are the different types of notices, common causes and how to respond to such notices. So now let us move to today's session. Today we are going to learn about the matching of GSTR-1 and GSTR-3B along with GSTR-2B. So in this session we are going to cover the basics of GSTR-1, 3B and 2B. Then we will see matching methods and also we'll cover the tools and common errors while matching GSTR-1, 3B and GSTR-2B. So first let us understand the returns. We have already covered this in our previous modules. So we'll quickly cover the returns and their types. So first, GSTR-1 return. It is the return for outward supplies. It contains invoice-wise sales details uploaded by the supplier of goods or services. Then GSTR-3B, it is a summary return where tax liability is paid through cash or input tax credit availability. It includes the consolidated data of sales, purchases and input tax credit claims. Then GSTR-2B. GSTR-2B is a static auto-drafted statement that reflects the input tax credits available to the recipient based on the GSTR-1 filed by the supplier of goods or services. So GSTR-1 and GSTR-3B are filed by the taxpayer, but GSTR-2B is a system generated return based on what suppliers file in their GSTR-1 return. So why the matching is required? To ensure that the sales reported in GSTR-1 aligns with the taxes paid in GSTR-3B return. Also, to confirm that the input tax credit claimed in GSTR-3B matches eligible credits as per GSTR-2B. So moving ahead, let us start with matching GSTR-1 versus GSTR-3B. So The objective is to ensure that the taxable value and the tax liability declared in GSTR-1 matches with the outward liability figures in GSTR-3B. So to match both the returns, the first step will be to download the GSTR-1 return and GSTR-3B return from the GST portal. Upon the downloading, compare the outward taxable values and tax components, that is IGST, CGST and SGST as declared under table 3.1a of the GSTR-3B with the GSTR-1 totals. So table 3.1a of GSTR-3B will be the sum total of all the outward supplies reported in GSTR-1, that is table 4, that is B2B supplies, then table 5 B2C large invoices supply, then table 7, that is B2C other supplies, then outward liabilities arising out of advance receipts and impact of any debit notes and credit notes issued during the period. So on matching both the returns, there could be scenarios like tax shown in GSTR-1 but did not get paid in GSTR-3B, or it can be higher tax paid in GSTR-3B without invoice declaration in GSTR-1. So there will be consequences for such mismatches, like department may issue notice for underreporting, or any deficiency in the taxes paid will be recovered by the department along with interest and penalty. So any mismatches that remains undetected and uncorrected in the subsequent returns shall be rectified in the annual return. Also, the mismatches may impact the input tax credit availment for the recipients. So if the mismatches are identified on time, then it is always advisable to amend in the subsequent GSTR-1 return and adjust the liability in GSTR-3B return of the subsequent periods. So moving ahead, next we will see matching GSTR-3B versus GSTR-2B. So the objective of matching these two set of returns is to ensure that the input tax credit claimed in GSTR-3B matches the eligible input tax credit as per the auto-populated GSTR-2B. So to match these two set of returns, we have to first download the GSTR-2B from the GST portal. Then we have to download the GSTR-3B for the month and compare table 4A of GSTR-3B with the input tax credits available section in GSTR-2B. So while matching the total input tax credits claimed in GSTR-3B, the debit notes or credit notes as appearing GSTR-2B must also be considered. So what are the important matching heads? It will be B2B invoices, then credit notes, debit notes, input service distributor credits and imports. So what will the common reasons for mismatches? It will be supplier did not file or delayed in filing of GSTR-1 return. If the GSTR-1 return has been filed by the supplier belatedly, then it will not appear in the current period's GSTR-2B. It will appear in the subsequent period's GSTR-2B of the recipient. Then the supplier filed the GSTR-1 return with incorrect GSTIN of the recipient. In such a case also, the input tax credit will not appear in the GSTR-2B of the recipient. Then claiming ITC on ineligible goods or services. So there are certain ineligible input tax credits that cannot be claimed. So this could also be a reason for the mismatch. So what are the impact of mismatches? Excess input tax credit claim may lead to demand and penalty. So the department will claim or recover the excess input tax credit along with interest and penalty. Also, the department can disallow the input tax credits that have been claimed being ineligible in nature. So the best practices to keep the GSTR-3B and GSTR-2B data aligned will be to keep a regular follow-up with the non-compliant suppliers, then claim input tax credits only when invoices reflect in our GSTR-2B. So no manual claim should be made in GSTR-3B. Only such claims should be made which are appearing in GSTR-2B. Then maintain a monthly reconciliation tracker. So a monthly reconciliation must be made so as to ensure that all the credits that pertain to us has been availed, or such credits which are not availed by us due to the reason that they are not appearing in our GSTR-2B must be communicated to the suppliers on time. So next, let us see the triangular matching, that is GSTR-1, 3B and 2B. So let us understand how GSTR-1, GSTR-3B and GSTR-2B interact in a triangular matching. So first, GSTR-1 and GSTR-2B. So the supplier uploads the invoice in GSTR-1 return that appears in our GSTR-2B. So the supplier declares all the B2B invoices in GSTR-1 return which correspondingly appears in our GSTR-2B return for the reporting period. Then GSTR-2B and GSTR-3B, we claim the input tax credit in GSTR-3B based on the GSTR-2B that is auto-populated from the supplier's GSTR-1 return. And finally, GSTR-1 and GSTR-3B, our sale invoices in GSTR-1 must reflect in the taxes paid in GSTR-3B return. So an ideal example will be, we have filed rupees 10 lakh as outward supplies in GSTR-1 return. This 10 lakh must appear as taxable value in the GSTR-3B return. Then we have rupees 2 lakhs as input tax credit in our GSTR-2B return and claim rupees 2 lakhs as input tax credit in the GSTR-3B return. So this type of triangular reconciliation ensures the compliance, then avoidance of notices and smooth flow of input tax credit without any litigations. So what are the tools, reports and the final tips? So the tools that are used for the reconciliation process are Excel reconciliation sheets, then GST and auto drafted reports, then accounting software with GST modules like Tally, Zoho or ClearTax or any other third-party software that assist in GST filing and reconciliations. Then GSTR-2B reconciliation utility available on the GST portals. So it is advisable to reconcile the data on a monthly basis. If not possible, then at least do it quarterly, and compulsorily it must be done before the filing of annual return, that is GSTR-9. Also, it is advisable to use HSN and invoice number wise reconciliation for maintaining the accuracy and create vendor compliance scorecards, and with such scorecards the report mismatches must be communicated to the vendors on an immediate basis. So to conclude, reconciliation ensures the accurate tax reporting, legitimate ITC claims and reduced risk of notices. So before we conclude with this session, let us see the actual filed returns, that is GSTR-1 and GSTR-3B, and downloaded GSTR-2B returns to establish the interrelation between each other. So let us first start the matching of GSTR-1 and GSTR-3B. So this is the GSTR-1 filed return for the period of March. So here we have the total B2B supplies amounting to rupees 1,50,000 and the corresponding taxes are 13,500 under CGST and 13,500 under SGST. Then we have total B to C supplies, that is 26,25,408 rupees. Corresponding taxes are 2,36,286.72 and the same amount in the state tax head. Then other than this, we don't have any related or amendments during the reporting period. So the total turnover or the total taxable value as per GSTR-1 shall be the sum total of B2B and B2C supplies. The total shall appear in the GSTR-3B in the column total outward taxable supplies. So let us see the GSTR-3B return. So here is the GSTR-3B return. The total amount comes to 27,75,408 rupees. Corresponding taxes are 2,49,786.72 and 2,49,786.72. So this was the total amount. We can also confirm this from the HSN total here. 27,75,408 rupees is the taxable value and 2,49,786.72 under state and same amount under the central head. So this amount is appearing in GSTR-3B return. It means that both the returns match with each other. Now let us see the GSTR-3B return and the corresponding GSTR-2B return from which input tax credit has been claimed. So let us see the total input tax credit that has been claimed in GSTR-3B return. Here's the all other ITC that has been claimed in the GSTR-3B return. It amounts to rupees 49,426.25 under the IGST head and 29,160.52 and the same amount in the SGST head. So we have to verify if this amount is matching with the GSTR-2B amount. So let us see. This is the GSTR-2B downloaded from the GST portal. So here are the different tabs. Here we have ITC available. So in the first column, all other ITC supplies from registered person other than reverse charge. Here is the amount 49,426.25. This is as per the GSTR-3B return, but here we can see there is a difference of certain amount, that is 29,277.04 and 29,277.04. So there are some differences and the reason for such differences is credit notes. Here we can see the credit notes 116.5 to 116.52 under both central and state heads. So the net ITC that has been claimed in the GSTR-3B return is the difference of ITC available less the credit notes. So the amount is matching between both the returns. So this is how the matching is to be done and the reconciliation has to be prepared between the all three set of returns and the books of accounts. So that's it for the session. Thank you.